All right, it says we are live. Good afternoon, everyone. It's just me, no adorable dog today, although I like that he gets comments in here. I want some tickers instead of the woofers. Welcome to new subscribers. I know I got a couple, actually more than a couple, thanks to the CMT Investopedia articles I've been writing. I hope you've been enjoying those. I'm going to cover some of the stuff today that I've been writing about. Like I said, I only cover multiple Sigma movers that are significant market moving, type headlines. And we go into the data for that. So without further ado, let me share the screen today. And really what happened, it was below average trading today. I'm going by SPY volumes and other of the large indices. But it was pretty quiet. The Fed minutes came out at 2 o'clock. They basically signaled that it's very likely that September we're going to get that rate cut. And July, they were very close to cutting. So you're going to get the cut September 18th, as we've been saying. Home construction rally 3%. That was the big story today. Really a huge rip. We'll take a look at the chart. We've been talking about it. Stay long. I wrote about it. If you haven't seen that yet. Also, which ran up 3% today, Arc Genomic Revolution. So I was right the first time on my pad here when I had Arc G calls. Then I scratched out and wrote puts. I was right the first time. This thing is continuing to run. We'll see if there's a setup there. And materials ran 1%. And the down moves, this is interesting. Nothing down today in a multiple sigma level. Mexico was the closest. We'll take a look at that. It makes its list here. It makes its way on the list here for the top 3 losers. I can't even find more than 3 losers down more than 1% in an ETF for the past 5 days. So totally a risk on. And you can look at the stuff here. It's risk on, but in interesting fashion. It's semiconductors, it's ARC, but it's also a huge tilt to gold and the metals. People are not done with that trade yet. And then we'll go through the top trades of the week. It is ARC G. I gave you that one in a way. Or RK. They're both up 8 to 10% in the past 5 days. And then silver is the third best runner. So we were saying that it looked great 2 weeks ago for a breakout. So things are looking well technically. The VIX was up, not significantly, but we'll take a look. The VIX was up nicely today. Where all the indices were up. So it wasn't massive moves for the NASDAQ. The Qs were up 0.5%. The Dow basically flat, up 0.1. SPY up 0.35. We'll pull up the chart on IWM with the big mover up 1.3. But the VIX was up about 1.5%. I don't think we're going to get those new all-time highs. RSP, the equal weight, which I wrote about, you'll read about that tomorrow if you're a subscriber, is getting very, very close. It's less than 40 basis points away from a new all-time high. So we'll take a look. All right, without further ado, let me share the screen here on the intraday for the SPY chart and show you a little bit of what I'm talking about. Alrighty then. All right, so this is the intraday chart. We put in our high at 10:30 a.m. And then our lows at noon, and then range bound ever since. We did close above VWAP, or the volume weighted average price, typically a good sign of strength. Just very low volume, but there was, a strong amount of orders at 3:30 pushing us above VWAP. When I zoom out here, just getting very, very close to the upper band here. My target was closer to about like this 550 on the higher end. So market resilience, never want to doubt that. But all, taking this all in together, and of course, Powell has the speech on Friday afternoon or Friday during the morning, and we'll see how the market trades after that. There's also a pretty drastic jobs revision today. If you saw the labor report, it's actually delayed data, and then we had a little bit of stop and go in the markets. But all that being said, over the next 3 weeks, I just see us going back towards 540 to 545. Just this congestion of moving averages, middle Bollinger Bands, and Fibonacci retracements is a pretty meaningful level. This has been basically a legitimate, yet again, a V-shaped recovery. If you look at this level here on August 1st at 552, I'll round for simplicity's sake. Then we trade all the way down to 511 on the Japan scare on August 5th. And then here we got all the way back to it on August 15th. So the whole Japan thing, I know a week and a half is sometimes a lot of time for people, but we erased all that, this whole scare, this whole retracement, the whole correction. So don't be surprised. The same way I said we were going to have a drift up for about 2 weeks, I would be, remiss if I didn't think we're going to consolidate and digest some of these gains. And I'm pretty much banking on us trading in terms of SPY right around 547 to be exactish in about, I would say in about about early September. I would say about 2 to 3 weeks from here, I would see 547 ish trading, and that's 14 points away. Not a massive, sell off, but that's, what, 2.5%. People are probably going to think there it is. We couldn't squeak to new all time highs. And then here we go again. But it's not so. I see the new all time highs happening in September, late September. So that's that. All right, let's pull up the charts of stuff that's really moved today that we are talking about meaningfully. The home construction. This is your Lennar. DR Horton makes a lot of the CTF, I think 35%. This is getting going. I think it's going to continue going to 123.35 is what I wrote in the articles. You can see it tomorrow. Which would be just inside of the 52-week high, and that's kind of what I'm saying for the S&Ps and the equal way. So it kind of makes sense. Again, I don't have a bias that I come in with these calls, with these videos. I look at the charts and then I form a thesis. This is getting going. These guys didn't, get the memo about the whole Japan crash. It was delayed. It got kind of hit 2 days later, and then really just up and away. Similar recovery to the S&P, but much less damage done. I think this is getting to 123 in the next week or two. It's up 3% today. I'm saying so it closed essentially at 119. Another $4 is up 3 today. It's getting going. If you don't have a position on here, would you chase it? I kind of wouldn't want 118 even is where I'd probably place a trade here. I wait for a little bit just because I don't think there's that much hair on the bone or meat on the bone. Hair on bone would be weird. But $5 from here, I think, is where you're going to get to. But look at that slope. You want to stay long this. This is one of the best trades of the entire past 52 weeks. It's literally an absolute basis. It's long Bitcoin, long semiconductors, short volatility, and long home construction is right there. And the reason being, it was at $82 last August, and now we're at 118. So just a masterful game. Let's take a closer look at ARKG and what's going on with this. This seems very playable soon. You could have played it both ways. Let's take a look. I think you want to have this exhaust with the market. I had that accumulation phase for the SPY and the broader markets ending on or around August 20th, which was yesterday. We continued to squeak higher. These the cycles are not exact. You can always squeeze out a couple more reps to the point of failure, right? Which is what my trainer says. Not me. I actually have a trainer. But I think this wants to go a little bit more. Like I said, it's going to be magnetized. Is that a word? To this 50, the 200-day moving average at 27.39. And I think this is actually going to capture a pretty nice spot to get short. It hasn't really held, and I wrote about this as well in the article. It hasn't really held ARKG, the 200-day moving average, since back in March. Excuse me. So this hasn't really had the flight of investors dollars for the past 5 months. It's kind of creating a base here, but almost a broken cup and handle. But I just think this is going to be really heavy. It is starting to slope up the 200-day moving average, but I think it's going to prove too heavy. So I think right around 27.40, if you can get there, it might go a little higher. I wouldn't be shocked if this squeaks all the way just because the momentum it has, especially off the bottoms from Japan, crashed 22 to 27, a huge rip. This is up 10.5% in the past 5 days for an average of 2% a day. Exceeding that today tells me the momentum is still there, so I'm not going to short this thing first thing tomorrow morning. The upper target I have for here is 28.5. I think it could actually get in here, probably tweak some of the algos and have new 3-month highs, and this is a high-performing area, but I think we'd be a little bit of the wiser and have a sell there. To be very frank with you, you could see it gets above several times above the 200 moving average, but it's not long lasting, and then a sell off ensues. So keep a close eye on this one. I would almost set a trigger with your broker electronically, whatever data provider you use, and you have a 27.40. Really get your spidey senses tingling. Be aware of that there. See what kind of candle we get then. Is it consolidating? Is it up 10 bips? Is it down 2%? Lets you know the end of the run. So I would love to see where it hits 27.39 and then ultimately max 28.49. But I think it's going to slow down here and run into a roadblock. So ARCG up 3% today. So we had three multiple Sigma movers. The ITB, home construction up, call it 3%. ARCG up also 3%, 3.4 essentially. And then the materials sector ran up. So again, about the thesis, home construction has more to go. I would get long, but you don't have that much more to go, but like another $5, which is nice, especially if you do it, utilize that through options. ARCG is getting very close. I want to sell. Let's see what materials the picture looks like. So materials, I haven't looked at this chart in a while, actually. Nice rising 200-day moving average. It's been holding that sucker since November. Okay, so this looks strong. The 52-week highs were put in here April 3rd. A lot of good blue here, meaning it's overbought. A lot of overbought here for essentially a month. Not gross levels. It never topped above 77, but that's a lot of strong readings basically the entire month of March, and then for just flares in December. Now what? Similar to the home construction, and they're obviously a little bit correlated because you need materials to build homes. This looks like it has a little bit more to go. I think this is going to get to 93.5. And like I said, when I talk about these levels, so the 52-week high, I didn't even look at it. The 52-week high is 93.72 to the penny, the absolute tick. And when I have my target of 93.5, I'm using a Bollinger Band on a different time frame through another screen I have. It's really not important to share. It's similar on this. It basically anticipates a little bit of different, more volatility expansion. So you see this little blue bubble starting to go up. That's essentially what I'm looking at. And it gets right there just inside. So it's again, the thesis kind of sticks, and it's not just my interpretation of the charts. It's what makes sense, in the grand scheme of things through probabilities, through giving this time. So over the next week or two, I see this going to about 93.5. And then after that, give it about 3 weeks. I think this wants to consolidate towards 90. All right. So a little bit of a fall off there after that. So interesting areas. We're not talking about mega cap tech, semiconductors right now, but we will. All right. So top five. And like I said, nothing was down significant. No multiple Sigma movers, totally digestion phase. VIX was up today. ARCG, the top gainer of the past 5 days, up 10.5%. We already looked at the chart though, so I'm not going to do that. Let's go to the broader ARC. And this is very heavy on Tesla, Coinbase, and Roku. Let me pull this up here. So, yep, I think this, so it's up 2.5% today. Still pretty impressive move here. Look at their rising 200-day moving average. It's been kind of doing this dance with it, honestly, since April. Since mid-April, it's been spending a little bit of time under, just barely peaking its head above in mid-July to be overbought, and then it ran into that resistance here right around the $50 mark, and then it sliced right through the whole Japan scare. This was the Japan scare where my cursor is here. It sank all the way to, I'll just round the handles, $37. But 2 days prior, it was 46. So this thing can really move. Now what? I think this is running into very meaningful resistance at the 200-day moving average. I think it's going to continue to do that dance. Similar to ARCG, it might pop its head above and surprise some folks. That would get you to about, so the 200-day moving average is 46.36. Maybe you get to 46, 75, somewhere around there. But I think this is going to start to take a rest soon. Pretty bullish day, close right at the highs, nice looking candle. I think it wants to get to that 46.36. And then after that, I think this is going to consolidate towards its 21-day exponential moving average of 43.5. So that could be a trade there. If you do get that move to 46, you can, trade that down to 43 through, September put spreads. All right. The tilt this week. So you had definitely risk on with, ARCG and RK as folks are, gobbling up bonds and rates are declining. Silver was the third best trade of the week. We anticipated this last week in the charts. Let's see what is happening now. So, because remember, folks didn't always capitalize on the gold trade, so they're going to chase and they do silver. So this got exactly to the upper, look at this, upper Bollinger Band here. It got denied. It traded above it, but closed inside. And today, a fractional gain of up 0.3, but it is the third best gainer in the market over the past 5 days, up 7%, or 1.5% or so per day. Now what? I think you give this 2 to 3 weeks, and this is going to trade down to 26. So that is 95 cents or so, or 4% lower reduction. Kind of makes sense with total, the whole, just not sell everything, but in a consolidation coming for kind of all markets over the next couple of weeks. except, home construction has a little bit more to go and so on. So you got to pick your spots. But so silver, I think it's it already ran into this, meaningful resistance here. And I see it trading down to 26 even over the next 3 weeks. Had a great week though, if you're long this. Let's look at the gold miners. These have been also very hot. I wrote about them in the Chart Advisor. A lot of these I write about because they're meaningful multiple sigma movers. So same thing, new 52-week highs yesterday. It did it. We were anticipating getting close. Is it not? It did it here. You're getting vol expansion. The band is expanding, as you can see here. Now what? I think this did a lot off of the Japan lows. Again, you got to look at this sometimes in 2-week time frames. This trade as low as 34, and now we're essentially trading 40. That's a big 6-point move. That's magnificent. It's up 7% in the past week. So exact same gains as silver. And now what? After hitting that meaningful resistance, it's always, green skies ahead once you hit new highs, but trees don't grow to the sky, as they say, as I like to say. And I think this will consolidate towards its 21-day exponential moving average over the next 2 to 3 weeks, which is 37.20. So that could be quite a fall. 37.20 is right here where my cursor is, and that would be 250. A decline of $2.50 in terms of percent. That's 6%. So be careful always. Counter trend trading. It could be pretty violent, as you can see higher highs here. A great looking chart. It would be just a short-term trade if you needed something on to capitalize on downside momentum if things get ugly towards the end of the week. With Powell on Friday morning speech and whatever he says about interest rates and so on, what effect it has on equities and gold itself, and then voila, these guys are in the crosshairs of both. And then the stocks, the semiconductors. So you have a good mix of the gainers this week. So up the stocks was up 6%. You had ARKG up 10, ARK up 8, silver and gold miners up 7, and now semiconductors. So you had a little bit of mix of your metals, biotechs, and now semiconductors. So let's take a look. I remember without even looking at the chart yet, I'm not looking. I remember saying this got to where it should. You might have a little bit more of a jump, and it's going to consolidate. Let's see where we are. So nice move today, up 1.5. The analysis I had done before is SMH. It's a little bit different in terms of the allocations. Beautiful rising 200-day moving average. Its all-time high was back on 711. Now what? I don't think this is going to reach 240. It could. I don't think so. The candles are getting smaller, less excitement, as it were. Look at this huge candle. Look at this huge candle. It tells you it's a sign of things to come. I don't know when the reversal comes. I think it's going to happen this week, and I think this is going to trade down to about 226. So that's a reduction of 10 points, which would be for this group 4% decline in the semiconductors. I don't think it's crazy to expect that over the next 3 weeks. And 4% for semis typically means about 2-ish% or so decline for the Qs, which is again about 1.5% or so for the S&Ps. Which takes us right back to my 547 call for about just till after Labor Day. All right. Okay, so top 3 losers of the past 5 days. So those assets I just talked about were the ones on fire: ARK Genomics, ARK, silver, gold miners, and semiconductors. If you've been riding in the past 5 days, congrats. That's where the alpha of the market has been. Top 3 losers of the past 5 days. I got to call myself out when I'm doing right, and I got to call myself out when I'm doing wrong. I had a sell order in yesterday for oil. I did not get executed. I call it penny rich, pound foolish, but it didn't exactly line up. Sometimes you have to be disciplined and have your levels. Oil, I don't want to say sank, but it's down 1.6, slicing through the 200-day moving average, as yours truly wrote about 2 days ago. But there's one thing to be right, and there's one thing to be right and make money. So this one, hopefully some of you guys out there did. My call was for it to get towards 71 over the next 2 to 3 weeks. This thing has done this in a hurry. I was mentioning it when it was trading 70. It was just 76 even, right here where my cursor is, and it's just been down, down, down. It's had some strong mornings where I saw it was up like 40, 50, 60 bips, and then it immediately started going lower. Now what? If you're short, congratulations. This may have some fits and starts, but I think this wants to go down to about 70, 85. You're seeing the vol expansion here. And I think this is not going to give folks warm fuzzies. So ironically, how we say that, the some groups, ITB, will get right within a rock's throw of its 52-week high. I think we said that for another asset as well. This is going to, I think, oil is going to get very close to its 3-month lows and not get people warm fuzzies about the whole growth prospects. A lot of people always trade oil in terms of what global growth is and expectation. So 200-day, absolutely flatline. This has not done anything since May. It goes above the 200. It goes below the 200, almost similar to ARC, but this is actually losing momentum. If you're short, I would stay short. I would get out around 71. I'll look for an exit anywhere in the next 2 weeks or so. It's going according to plan, and then it probably will likely bounce up towards the 74 to 76 region. It depends how this next 2 weeks go, but that's the trade on oil. Mexico, the second biggest loser. I wrote about this, was anticipating a drop imminently, and it was down 1.8% today. Looks weak. It did a lot of work here over the 52-week lows with the Japan crash from 51 all the way to 58. That's quite a move. And now let's see where we are. I think it ran into that resistance. It looks tired. 3 out of 4 down days. Not exactly the hottest area of the market in Mexico. They've had political turmoil ever since this election on June 3rd. And this 200-day moving average looks like an absolute ceiling at 63.48. You saw some of the other assets that weren't doing great in terms of a year, ARC Genomics, ARC, but at least they have the 200-day and starting to curl up, and at least they're doing the dance with it. Oil as well, up above the 200-day, below it a little bit, the 200-day. This just looks heavy ever since the election. It's gotten, knocked out essentially. So my call for this is over the next 2 to 3 weeks. This is going to trade down to about 52.5, which would be right about here. So just inside, I'm not calling for new 52-week lows here, but a move lower. So 55 to 52.5, pretty good move there, about 5%. Okay. And then one that we don't always feature, but it's one of the few losers this week. There's only been 3 ETF losers of 1% or more, and the other one's the US dollar. So, they're selling this off, kind of give us a risk on flare here, buying bonds. Let me see where we are here, because I also, we highlighted this the other day. This is a little bit lower than I thought it would go. Usually doesn't really break its 200-day moving average. 200-day is starting to go lower. I think this should mean revert at the least to 28.30. This is, again, the US dollar ETF, so it doesn't seem like a big move. 23 cents, but that's significant for the dollar, considering down today was 30 bips, and that's a big move. We are at in terms of the dollar support, we're at the March levels, so we're at 5-month lows in the US dollar. So important to note, similar to the spending time above the 200-day and below, you just had monster selling on August 19th, as seen here in the volume. So it was actually the most volume in the UUP in a year. So it could be funds, it could be broker dealers. I don't think it was retail, but 4 million shares is not typical. For example, did 400,000 today. So all that being said, I think this will mean revert to 28.30, and over the next 2 to 3 weeks, make its way back towards its 21-day exponential moving average of 28.55. So something to look forward to. All right, best 3 absolute trades of the past 5 days: long ARC-G, long ARC-K, long silver. We will have our Friday video recapping the week. Sign up to that Investopedia CMT newsletter. I got one more day of articles to go, or 2. I think the last one we published on Friday. It's for the whole week. And maybe I'll have Rocco back with me tomorrow. And I think I think that's it. Peace. Yeah. Oh yeah. Last thing. Try and sign on at 4:15 and give me some tickers. I'll put them in right here live. It might make the show a little bit longer, but I'll do it live. I think it'll help everyone out. I do single stocks as well. I typically like ETFs because it makes everything come together. So if you have a bite on ITB, then you can look up your Lennar or DR Horton and so on, etc., so on, so forth, what have you.